following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. Monday morning here in North Carolina. And the dollar, we got to take a look at it. We're showing it on our screen first and foremost here. And this could be running the show for a lot of different sectors out there. Commodities have to reprice themselves. And remember, this is our daily. This is our daily. And as we look at this, you know, we talked about that 129 area, 128.29 being this possible stopping point for a while, a little bit of a resting phase. As we get to that weekly unfair high, I just want to let you know we've reached 100.04, and now we've got a new support area. We had this support that keeps ratcheting up here to play around with. 98.79, 98.80 is the bottom of our daily profile, but now we've kind of got a kind of a day trading type fence, if you will, to try to lean against on a short term, 99.67. All right. So ultimate goal, again, taking this thing back a little bit. You know, we're compressing up into this area, and you know, in my mind, this is kind of indicative of a little bit of a blow off. We're probably going to go past 129 here, but remember to put your stops in. A lot of guys got shaken out of this dollar trade a couple of days ago, actually, or Thursday, was it? You know, had a pretty, not a violent pullback, but had a pretty, no free lunch type pullback. I'll put it that way. Remember, it's not like you just get in these things and they just continue to cruise up. There's going to be some volatility. Be aware of that. I think I'm not in my camera here today, right? Let me adjust this. Okay, Al. Great. You're welcome. So that's the situation on the dollar. Let's go right in the S&Ps. This has been something that's been toying around with my patience. And as you look at this, you know, again, this is not the type of action you want to see from the short side. We've kind of gone into these levels, which are 2089 on the daily unfair highs. We've kind of come off of there a couple of times in the past couple of days off of this massive rally. When we rally like this, you want to see things, we talk about this all the time, get the heck away from these inflection points, and that's not exactly happening now. We're kind of compressing up into it, and just like the dollar situation, that's a little indicative of a possible blow-off here. So as we continue to gather momentum around that 2089 area, we could be in store for a little bit of a punch through, scare some folks, and here's our weekly situation. The most recent unfair highs on the December contract or highs are 21.18. So that could be the next possible level up. And the reason I'm saying all this is because we've also got this is our breadth situation. We've also got some cohesiveness with this. And on our 60 minutes, which are now operating pre-market, we kind of crossed that line on the 18th and haven't looked back too much since that happened on that most recent crossover on our short term. I updated the manual on this thing since we've changed it so much this weekend, spent a lot of time on it, but our tech guys haven't uploaded it yet. And I started just a very long instructional series on this scanner. And that's in addition to the webinar that we gave on TFNN. So something to look forward to for Christmas. I'm going to give up my night job. Trust me. We're not going to spend too much time on the foreign indices. There's not a lot of activity there. You know, the DAX, I'll just quickly just look at this one. The Shanghai, same situation. Not a lot to talk about there. here's the good news about the DAX. We talked about this big area now that we had to get back through 10.891. New profile sitting here now, unfair highs at 11,166. And what does that mean? That means that now we've got a whole new entire fair auction to deal with on the weekly, which doesn't happen that often. I'm starting to think people are behind me again. That's probably got some kind of clinical label you could put on that, but so that's the situation on the DAX. I'm hearing things. I'm sorry. So that's the situation on the DAX. And as we look at moving forward with this, what do you do with it now? You've got 10,944 sitting at the top of our profile on the daily, but remember that weekly trumps a lot of different daily 240, 60-minute down the line. And what we're always hoping is that we can find a DMZ to possibly kind of chop around in to do some day trading with, if that's your MO. They're showing terrorism on the screen. Oh, I sensed that out. My God, I hadn't had enough coffee yet. Here we go. So as we look at this DAX situation, remember this particular inflection points, as Ron Burgundy would say, is a big deal. 11,166 stops above. I think we could relax a little bit on the DAX and actually come down and meet this 10,944. So that's kind of you got to, in my opinion, wait patiently for at least one of those inflection points to be hit. We've kind of already hit it this morning and yesterday on the DAX. So stops above there on the short side. But remember that the U.S. stock market could kind of spin here, consolidate, move higher, and the DAX obviously is looking at that, just like I'm looking behind me today. Yeah, the IRS. I just looked at the den. If we can avoid saying, or putting the three letters together for that acronym IRS, I'd really, really appreciate it. Just seeing those three letters scares me. Jay. Lay off, Jay. Here we go. 10-year. No big changes there, except for we're going to more than likely have a new profile attempting to appear down here. I thought personally we were going to stay above this 126.17 area and start shooting for 127.11, 127.19. I'm still going to call this a noise factor here. Little non-directional. I'm not stopped out of this trade yet. I have my stops. 126.17. I think last week we talked about 126.10 was my stop area on it. That's still the case. Gold. Not a lot of good news here. We came back and hit. Let's see. Let me kind of show you those 2 days, Thursday and Friday. We came up and hit 1086.5, and then 1087 rounded off. I mean, this is a really, really good example, and that DMC is up to 1090. This is a really, really good example of how these long-term inflection points, 1086, 1087, that weekly that we've talked about. And I'm going to pull up our scanner here. Go to my futures section. Black cell. Gonna talk to the database guys about that. We're doing some things with our 60-minute to try to incorporate our arrows, by the way, that we've got on our gray cells on the rest of the time frame. So I'm sure this is something going on with that. Okay. All right. So gold. Where's gold? There it is. Okay. There's that 1086.55, 1086, 1087 in the scanner. Still not a lot of green shoots here anywhere to even start nibbling on this thing. So again, we came back and met the weekly unfair lows, and I think that's just going to be a big number for us to have to stay below and to trail lower. Where do I think this thing's headed? There's really no way to know that right now. I think the profiles, you have to kind of allow this thing to to unwind down here and for new profiles to attempt to appear on the daily to start even taking this thing off. That just hasn't happened. Here's kind of the 240 regulator of some of that trade. I mean, like we haven't, this is 1080 up here. This is 1085. We haven't broken 240 profiles even. This is, and right now, 1084, 1085, 86, 87, breaking that is going to be a very big situation, especially on a closing basis. And I really don't see any reason to take the short trade off until something like that happens, and just continue to let this thing fall apart. Crude oil, same situation as gold. Not a lot of reasons to even mess with this trade. We've got a good stop area above 43 on the January contract. That's kind of the way I'm looking at it. You're seeing this thing spin around the low profiles on the weekly and the daily. Scanner's going to give you reasons to get out of that on the stop-oriented basis. We're going to take a look at the XLY here. This one talked about a big divergence, did a Bloomberg report on this, talked about the shorting areas between 8160 and 8161, stops above 8161. We're trading 8122 right now pre-market. Still, this is a little bit more of a high-risk trade for guys out there. There's kind of short the weak stock situation in a strong market. This is one that, in my opinion, is developing some divergence pattern that may catch some people quickly, and they may have to get out of this thing in a hurry, because there's going to be a lot of people, if this happens, that are going to be wrong at the same time. So not for the faint of heart, but the XLY trade, we're still kind of spinning around in that shorting area. The good news is on a trade like this, you've got a mega high risk reward scenario that stops above 8161, and then you've got targets at 71 down below. So you might have, like a 10-to-1, 7-to-1 based on your risk appetite, risk reward scenario on this type of trade, and any type of market help may cause this thing to start snowballing down south. Australian dollar, we're going to look at a couple of currencies after the break. Got about 15 seconds. Talked about staying away from this on the short side. What's going on here? Let me look at this at the break, guys, and see if we can figure out what's wrong with the Australian dollar short. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. This is a great example how the scanner's usually right. Let's go to the Aussie dollar. Here's my inflection points. As you see that bottom to the arrow down, that means we've kind of been in a downtrend here. There's our inflection points. But my chart here is actually not exactly right. So that's a problem with my charts with these signals. But the scanner's getting it from our own calculated database. So let's move forward here. Wow. Got some charting issues here on the currencies. The scanner is right. My charts are somehow not acting correctly right now. We'll get that fixed. Let's go back to some of our other usual suspects that we have to cover. Let's take a look at the XLF. Again, we talked about this kind of being the maybe the safety play right now. And why is that? Talking about buying 24, waiting for pullbacks into that. That's our support area that happened last week. Talked about a widening yield curve based on a massive quarter point possible rate hike, which still hasn't happened, and may go out of the cards based on a blip on the radar screen. Like, if the unemployment rate ticks up a tenth of a percent, somehow that'll freak everybody out and say, oh God, all bets are off. But I still think this is again something you don't want to be shorting right now. There's the daily situation. Market seemingly XLF goes up, market goes up, XLF goes up, market goes down, XLF kind of goes sideways. So that's kind of that relative strength trade. I still like this sector. I want to pull up some of the guys in this sector. Jay, you're still mentioning those three letters. Just want to remind you. Here's the situation on JP Morgan. Kind of like the XLF, you got weekly highs 66.53 on this one. Citigroup, all these guys are looking very, very similar as far as profiles go. 53.59 stops on Citigroup now, based on your appetite for risk. You've got kind of an intermediate 53.65, 53.59. That little DMZ below there's your stop area on this particular bank. Let's take a look at one of my two favorite banks, Bank of America. Strong. Orient stops below 1743. Big time stops have to be below 1689 on Bank of America. And let's look at my other favorite bank, Wells Fargo. Now this one, intermediate looking great, but this one you can orient stops below 55.46 on Wells Fargo. We're going to take a look at IBM really quick, the IBM update. That should be a part of this show. Weekly. That 143.94, big time stops have to be below there. 137.01, that was breached on Friday. And now on the intermediate, and I personally am taking like a sit on the sideline situation right now on IBM, because we either have to do one of two things. We have to get back below 137.01 for me to get back in the game on the short side on IBM, or we have to rally up into 143.94. Right now, don't see any leverage based on what happened Friday. So again, we're for range traders, we might have some good day trading opportunities in the hole right now in the DMZ, but again, I'm going to have to see this thing close below 137 again, or rally up into 143.94. That's just the way I'm looking at IBM. Let's take a look at Procter & Gamble. A little bit of news in this stock. The worm has turned a little bit for this one. 73.47, had a couple emails about this because of the profile stops down below there on a long-term basis. If you think the market's going north, sometimes this is the anti-stock, so you got to pay attention to it. But I think the market, if market goes up, you've got a good chance for this thing to head a little bit higher, and long-term stops below 73.47. Guys, stay tuned. We'll be right back in about 5 minutes, and keep hitting them.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were talking about some banking stocks before I left, just kind of going through some generic, the JP Morgans and the Bank of Americas of the world. Here's Goldman Sachs. Guess what's the most heavily weighted stock in the Dow? This one. And as we look at this, it's a little bit different situation from the actual banks. I mean, this is the so-called investment firm. 193.57 coupled with 193.36. That's going to be a little bit of a lid here on this one right now, and it's not showing a strong relative strength type situation. Again, markets could drag a lot of these stocks up, so that's kind of where you possibly could orient some stops. But you got a little bit of play down here. Could revisit the 188 area and even the 176 area, but you got to keep your eye on the breadth and the broad market on Goldman Sachs. Going down some of the other Dow stocks here. 3M, and I'm looking at the indexarb.com site. It's a friend of mine that runs this. Just does a lot of good real-time weightings, and actually a lot of very basic site, but some good information on this site as far as components of some of the large indices. Most of it's free. Here we go. 3M. Pretty big week last week, but again, running into some resistance around 160.09. These are all in the scanner. Here's a daily situation. This is a stock I would stay away from on the short side, even though we're kind of talking about a little bit of a lid here at 160.09. This long-term big rally the past couple of months and sitting right at the top of an inflection point, and also this intermediate kind of sitting there with support, a whole profile sitting below there. It's just, this is one to stay away from on the short side. The dollar going, also ignored the latest dollar rallies. And I am having some issues with my charts this morning all across the board. Here we go. I think Boeing's populating now. Boeing, as we look at this one, what do you do? Again, I'm a little partial to the market going a little bit higher. Not a big fan of shorting this against these weekly unfair highs. There's a situation on the daily. Not a pretty scene for shorts at all. This weekly close wasn't exactly above this inflection point either, but I think you can use this to orient stops around right below the unfair highs. We're going to take a look at God, man, I'm contemplating rebooting this. Nike, another Dow component. God, we need to have a raffle here. Wow. The entire fair, my God. Big week. The entire fair auction, as you can see. Does this thing deserve to relax a little bit? In my opinion, yes. This has been a relatively strong stock in a market that has had some dipsy doos here lately, but again, wanting to just get back on top again. Is it time to buy this? I think we got to have a weekly close. That was a massive move we had in this stock. A weekly close above 133 and then use it as support. Not a big fan of this thing continuing to just plow north like it did last week. Whew. Got to look at Apple. Okay. So last week, we had somebody call in from Michigan. Oh, excuse me, New York, Buffalo. Very nice gentleman. We talked about Apple kind of being just churning around in this big weekly fair auction. And we talked about, some resistance areas around 118.57. But we also talked about if we get a daily close above there, that's going to have to be looked at as support. And also any closes below 112 would have to be looked at as resistance. So right now, Apple may get some market help. You've had a close above on Thursday, and then you've had a kind of a daily kind of churn around here on Friday. So, what are we looking at today? Apple's trading pre-market about 119.64. So trading a little bit higher than where we closed on Friday, but the stock market looks like it's getting ready to pop again north, and that may drag this thing a little bit higher here. Do I think it's the best stock in the world to kind of load the boat on right now? No, I don't. All right, let's take a look at MCD, McDonald's. As we look at this one, a lot of these stocks, the ones that have been strong, are just sitting there right compressed up against some of these profile highs. This is somewhat similar to Nike. We've kind of gone a long ways. Excuse me, we've gone up pretty far in a short amount of time. Gone a long ways in a short amount of time. Do I think this thing could pop higher? Gonna have to have some market help here again. Do I think it's a short situation because it's gone up so far? No. We don't want to short these things until we think the market's, by the way, in a broad sense, is going to go south. And right now, with the breadth situation the way it is, And I'm going to go back to my dashboard here with my S&P breadth here. With the breadth the way it is, I mean, the weekly and daily is pretty consistent here. If you go to TAS says, again, you got the cohesiveness of these things. We looked at the charts for the S&P there. McDonald's at least is something you want to stay away from on the short side. You've got better candidates here. Any type of pop in the market is going to probably just lift a lot of these stocks that have shown themselves to be strong. What we want to do now is kind of depart from the Dow stocks that I was kind of running down that a lot of people send me emails on and are in their portfolios. I want to do some sorts here. I want to go to my home screen. I want to look at downtrend resistance, the custom sort that we've got in there. And these are stocks that are, obviously in a defined downtrend as we've coined some of these algorithms that are, and you can put these on your dashboard. If you go to quick navigation, you'll be able to add those. So they're a lot easier to get to than what I'm doing. So downtrend resistance, these are in by the algorithm we're using in a defined downtrend. On the long term, we don't do any short-term algos over here now. Those are kind of for, doing sorts up top on the upper left. So if I go back to my dashboard, I can, basically kind of play around with some things I'd like to see on the short term. But if I go into, keep closing that out, downtrend resistance, I'm going to pick out a couple of situations here. I'm going to go to BB&T Corp. Well, that's in the XLF. Let's kind of stay away from that right now. Let's take a look at Caterpillar, CAT, because one of the things here is, it's letting you know that we're either at inflection points in a downtrend on the weekly, and we haven't, been below and come up into those inflection points. Been above and come down to those inflection points. We've kind of rallied up into them, or we've done the similar thing, been in a downtrend defined by those arrows and that big weekly number, and coming up into an inflection point we can pay attention to. So Caterpillar, I'm just going to pull this up. Here's the more coffee. Okay, so here's Caterpillar, and one of the things that, it says down arrow 20. Market, has been lifting lately, especially last week. Caterpillar on a relative strength basis, I know it looks like we're kind of coming off this 69.39 area, but one of the things that the algorithm takes into consideration is previous bar. Okay, so the previous bar, we're sitting on these inflection points down here, and we're not showing a lot of reasons to get away from those inflection points. And I understand that we had this little daily situation pop up, but what that's saying is we were below this profile, we're coming up into it, and we haven't passed the noise factor. All right. So when I say the noise factor, and I think pre-market, what are we trading? 71, is that 7103? 7103. So when we go back into the scanner, what it's telling you on Caterpillar is we're in a defined downtrend. This thing has underperformed the heck out of the marketplace. And we are still in that noise area to not really define that we're breaking up into that even intermediate profile yet. So what the drill is here is when we get out of the noise area, this won't be a candidate anymore. But right now, we're still looking at it as turn the rinse the same way, find areas to sell this on rallies, and that's what the scanner's telling you right now. Let's look at another situation. Let's just pick one out here. Let's look at Electronic Arts, EA. And again, we're looking at the market may pop here. We're looking at these. This is Electronic Arts. Still defined as top of the box here, coming up into it from below, previous bar gray. Got a little bit of an opportunity here. I know we closed above, but we're still not out of the noise level as far as the scanner is concerned. So you keep your eye on this. If we get back down below 71.92, we may have an opportunity to short this particular instrument. These are a little bit, you can start reading this. You're at the top of a profile here on Dover Corp. I mean, if you really want to find some things that are, trying to read them at the same time here. If you want to try to find some things that are coming up into bottoms, which have really been, let's just find one here. Folks, there's not a lot of the market has dragged up a lot of stocks here. So let's try to find one here. There's not a lot of cool candidates here. Let's take a look at ADS. ADS. All the stocks on that particular screen have some kind of relevance of being downtrendish and being able to provide some inflection points to lean against. But here's ADS. Not a big week last week. This is a weekly. It looks like we've sold off significantly here the previous week, and we kind of spun around last week. That's not exactly cohesive with what the market did last week, and consolidating below these profiles, namely this bottom around 286.88 is without question not a very good situation. And you can go into the scanner on ADS. And Alcoa is there, the eternal short. You can look at the inflection points, 286.88, and then you've got 285.31, bottom of the profile on the daily, and you can orient some stops around there. Let's take a look at Alcoa. Man, who would have thought? Sorry about that. Let me get my screen figured out again. Okay. So why is Alcoa saying, bottom here? Remember, these are the really weaker ones when you see weeklies and they have bottoms. I mean, I've been kind of playing around with some different scenarios here, and it's providing different scenarios. But when we look at Eaton Corp, ETN, Fidelity National, these are stocks that are coming up into weekly unfair lows from below. So the previous bar was red. We've been in a defined downtrend. So I'm going to take a look at Alcoa here, which is what it's saying is bottom two, and then we've had a little bit of a rally and breaking above profiles on the daily. But remember, we always talk about this. Weekly takes precedence over daily over 240. So this is actually a big deal that we have closed below profiles on Alcoa and rallied back up into the bottom of our profile, 8.84. And we've been in the 7 range, guys. So we've rallied, 16% from the bottom already last week. Pretty big rally. But remember, this algorithm is taking into consideration, are we in a defined downtrend? Even though we've broken these intermediate profiles on the way up, we've come into a really nice place to start whacking this thing again on the short side. So we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're kind of finishing up with Alcoa there, trying to explain a couple of things when it involves some of the scanner picks on downtrend resistance. Going to take a look at another one, ETN. That was on the list. ETN. These charts are slow this morning. This is on a cloud server too. Okay, so what it picked out was, this is a really good pick. We're coming up into 57.91 from below. Bottom of the profile. The scanner is saying on ETN, there's that pick, bottom 21. Been below this weekly profile for 21 days, coming up into it, and also coming up into from below the top of our daily profile with that arrow down. So here's the daily, that was the weekly. And again, a stock that's completely underperformed the market this past year, showing some strength lately. But again, if you're going to try to short some stocks, any type of market pullback may cause these particular stocks in this particular sort to come back quicker, being that relative strength situation. Let's take a look at Kohl's, KSS, right there, 19, and then we got a top there. Let's take a look at Kohl's, KSS. This is in the sector that I'm not a huge fan of. So stock that's been down, down, down. You got those inflection points here on Kohl's right there. Here's our landscape view. That's where we're at. We're kind of coming up into that inflection point, top of the box on the daily, but still defined downtrend on the long term. So big number at 48.38, stops above there on the long term, and you're coming up into a nice little area right here on the daily, 46.93. So 46.93 into 48.38, you've got a little bit of a DMZ there, but it's alerting you to an intermediate trade, long-term trend down, coming up into an inflection point from below. Had a pretty big day Friday, trading 47.30 right now. All bets are off on this thing, 48.38 above, based on your appetite for risk on the short side. I don't see a lot of good news out there for this stock fundamentally, and I know Christmas is coming up and all that kind of jazz, but you're not the only person that's aware of that concept that Christmas is coming up. So these stocks just don't give you a free ride. These things are always incorporated in. Okay, so let's take a look at one more stock here. Let's just take a look at Skyworks Solution, SWKS. SWKS. Here we go. All right, so here we go. Weekly sitting here, defined downtrend, and this is a situation on the daily. We're in that noise level by definition, within that 10% variance, bottom or top. Here's 78.36. If we can get below there again, I think we can take a little bit of a ride down again. And where's the targets? In my opinion, ultimately, you've got about between 55 and 60 on the targets on this particular stock. If you're kind of a little lost in some of the concepts that I'm using, please, there's an archive webinar, what I did, was it last week or the week before? It's on TFNN. Feel free to watch it. If you don't have access to it, let me know. Stay tuned for Larry. We'll be back again tomorrow. Stay tuned for all the hosts at TFNN. You guys have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.